Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's episode, we are going to look at some of the large cap blue chip stocks that are currently trading at a very low rate. Now, why do I say that? Because in the last few months, we all know that the market has been correcting a lot and we saw the market has been constantly going down, right? Now, we see that there is a slight pullback happening. We see that the US markets, we've absorbed all the bad news that we could currently absorb. And we see that the Indian markets now are slightly moving in this beautiful upward trajectory. Now, if that is going to happen, then there are some really good blue chip stocks that are currently available at a very low rate, and we will not waste any more time. I will show you today 4 or 5 different stocks that are looking at very attractive rates right now, and if the market continues its bull run to an upward journey, then these stocks will be the first ones who will push the Sensex index up and also give you significant returns over time, at least more than 5 to 10 to 15% returns in a short span of time, right? So let's quickly look at it one by one. We look at both technical and fundamental little bit. Okay, chalo, let's go. Now, the first stock that I'm talking about is called Divis Labs. Now, we remember that Divis Labs actually fell down a lot and we saw that Divis Labs was struggling a bit, right? So the first stock is Divis Labs. So if you look at Divis Labs, right, from the last 1 year chart, 1 year is a bit too much, but even if you look at the last few months when they announced their massive capex, right, which happened somewhere around May 20th, the stock price fell down by a 15 to 20% drop. And now we see that a small pullback is happening. Why do we see that? Is because if you look at it from a day chart, look at this, right? This is how the fall has happened. Now, if the market starts going back up in a forward trajectory moment, and eventually, whenever it is, not now, but maybe in a year, maybe in a year and a half, when it starts going and taking out its all-time high, which by the way, Divis is a very good stock, so it can do this because it is fundamentally strong and they are doing really well. That's an easy upside of 43% right now, right? Assuming that the market keeps going down, going up. If the market starts going down, this is the level barrier for Divis. If it breaks below this, then it'll start going down to around a 3000 wala zone, right? So this is not good, but ideally if it is going up and if it breaks this previous fall where it fell from, which is 4363, then you will see Divis Labs going up again. So this is again very interesting. By the way, stay till the end. I'm also going to show you my I've also made a fundamental large cap small case for you guys. By the way, small case, please thank our sponsors for this video, which is small case. So they have partnered with us today. Now, small case, basically I've made a list of stocks that are fundamentally strong, like ICICI Bank, Tata Chemicals. I can't show all of these stocks today right now, but only the stocks that I can show, which I feel has good potential, I'm showing it to you right now. So if you look at all of these stocks, which is Tata Motors, Finance, Auto, Reliance, Divis, Ultratech, all of these have good potential, fundamentally strong stocks that can go up really well, right? And if you feel that no, Shashank, I don't want this, because it's too expensive for me, it's 36,000 rupees, and that too for investing one stock, then you can also look at value and momentum portfolio because they're doing really well right now. This is a paid portfolio by Windmill Capital, but I'll give you a coupon code that you can use where you can get 15% off as well. So basically what they do is they basically get positive momentum stocks that are again available at discount to its peers, and in the last whatever time frame they have done really well and they have been beating the equity multi-cap. Okay, awesome. Now let's look at stock number 2. Now the stock number 2 is called Wipro. Now Wipro is in the IT space, and we know that the IT space is currently taking a massive hit. Why? Because the results that are coming in right now are not looking very attractive, number one. Number two, all the times when we were work from home, IT companies were enjoying it. Now there is no more work from home, so all the guys are coming back into office and the margins are now going bad. Attrition rate is going slightly high. But Wipro has also corrected quite significantly. They have a new CEO that has come and they have also gone down. If we look at Wipro from a chart perspective, it is currently at its very strong lowest resistance, because if it breaks this, then it is going to go up down to 346, which I don't think is happening right now. So I would say there is still beautiful scope for you to buy this. I'm looking at the day chart right now. There is still a beautiful scope for you because it's right now, currently there's no good news in Wipro right now, but eventually I'm assuming it will go up. If the market goes up, we can see a definite upside as well in Wipro as well, anywhere between 50 to 75 points over a period of time, because now if the market goes bad and something really bad happens, it will fall down to 346. But keep an eye out on this level and understand the trends in the market also. Right, so Wipro is number 2. Number 3 stock is the steel sector, which is Tata Steel, right? Now, if you look at Tata Steel right now, again, Tata Steel is something that has gone down 27% in the last 1 year, and even in the recent past from April itself, from April 1st of this quarter, we can see that it's gone down almost 32%. Now, steel companies are what? They're very cyclical stock, right? They're commodity cyclical stock. They keep going up and down depending on how the market is going on. But if you look at it from a long-term perspective, steel stocks might do really well. Why? Because the construction theme or the infrastructure theme in India is doing really well. So looking at that, if you look at the charting perspective as well from a technical analysis, let me remove all the intraday charts that I've been using. Let me just remove everything, right? So again, even if you see here, this is the low that it has hit again. Everything is currently at its low. So if the bounce back happens right now, it will bounce back from this arena itself. Now it's very difficult for you guys to see it right now, but if in the long term, when you come after 1 year and then you'll be like, oh shit, this was a good level. But if it falls below this level, then you can also assume this. You can mark all these levels with you guys. You can actually put the alerts as well, that if it falls below 831, it's a sell. If it does not fall below 831, then the next trigger over here, where is it going to go up? It's going to go up to 1089, giving it a good upside momentum of 17% eventually, right? But again, fundamentally strong stock, so no worries on this. You can hold this for a long period of time. This is only something that I'm looking at right now because this is a good buying opportunity for all you guys as well, right? So this looks very interesting. Cool. Stock number 4 is Naukri, Info Edge, and Info Edge actually went up 3.5% today, right? And if you look at Info Edge, again, it has been falling down 19%, not as much as all the other guys, but if you look at it from a chart perspective, it has already done a small pullback right now. Ideally, all the other stocks, if you remember, are in this zone, right? This has already done a small pullback. That means the next zone it is going to go up to after the pullback is going to be 4951, and after that it is going to go up directly to this zone, right? So there is a good upside potential. It is trading in the range bound movement right now, but if it breaks 3358, then they will see a massive fall. But I don't think it's going to break 3358 because it had come down to its pre-COVID level boom as well, right? So Naukri is again very fundamentally strong, looking really well, and can do much better. Look at Ultratech Cement. Ultratech Cement, I think faltu mein gira, right? Why? Because if you think about Ultratech Cement, they only fell because they were doing a massive capex, and we did a video on capex as well, where we saw that the massive capex was happening. People took it in a very negative time frame. I don't know, I didn't like it as much. But again, if you see, Ultratech has already done a nice pullback by the time I'm doing this video. But is it over? No, it's not over. Now, if it takes a rejection here, it will come back here. So there's good buying opportunity. If it breaks this, then again, it's a buying opportunity. Either way, whether it falls or goes up, currently it's in that beautiful inflection point where you can take a nice trade, whether it can go up from here or back to its all-time high, which is around 33%. Eventually, this is not something that's going to happen tomorrow, guys, so please be aware. And if you look at it from a stock perspective, it is fundamentally strong. It is fundamentally strong even on the financial basis as well, because the demand for infrastructure, again looking at that theme, Ultratech Cement, while doing its capex, looks really strong, and with the pullback theme we're having, it is looking really well as well. Now, the fifth and final stock, which is now again trading at its all-time resistance level right now, which if it breaks, it will fall down even more. So it's quite scary, but it has fallen down quite significantly from the top. Look at the fall from grace, 48%, boom, right? That is Tech Mahindra. Now, Tech Mahindra, again, looking at the IT theme that we have right now, Tech Mahindra is suffering only because of the IT theme, and it is not looking good right now. But again, from a fundamental perspective, it is not bad at all. But from a technical analysis perspective, it looks in a very good opportunistic buying zone. But if you look at the sector overall, if you look at overall IT sector, they are currently in a strong negative position right now. But do we care? No, we don't care, because we are fundamental analysts, guys, right? So if I look at even TCS right now, look at TCS. After the result, TCS also fell quite significantly, right? It fell till here, this point. After that, it's now taking a slight pullback. If I zoom in, look at this. TCS is also now at a very bad point. TCS, you know, eventually will do well. Whatever happens, will give its dividends, will give its bonuses, will give its splits, whatever is required, and it will keep doing well, right? So now it's in a small pullback zone. Eventually, it will start going up from this direction as well. So these are the 5 beautiful stocks that I've seen. If you want to know more, you can check these out here. I've put all of them in this. I'll share the link with you. This is a free small case that I have made. If you want the paid small case, you can check out Value and Momentum, and you can put the coupon code. The coupon code is an affiliate link. So if you do that, it benefits me as well. Okay, coming back. So guys, that was a quick episode on 5 stocks, large cap, blue chip stocks, and a list of other fundamentally good stocks that I have kept aside only for you guys so that you can start looking at it very well. Again, I think there is a limit on the number of shares that the small case can do. So I think it gets capped out at a particular point. So if you want to share it, you should share it fast, or else you'll have a big issue, right? So again, the market is looking very nice. It's in a very good I would say good accumulation zone right now. All the bad news has been absorbed. Now only I feel good news is yet to come, and eventually if the good news comes, then we will all be very happy in life, and finally our portfolio will start going in green, right? Awesome. I hope you guys like this episode. Share it with as many people as you want. This is me, Shashank Udupa, signing off. Take care. See you guys. Bye.